Hey guys, Hunter here. This is a video on valid pullbacks. I'm not claiming to have made up valid pullbacks. Full credit goes to Dave Teaches. I'll link his video and channel below. So if you want to learn DTFX and everything straight from the source, go look at his videos. Specifically, the June 12th market review for pullbacks. Okay, so what is a valid pullback, right? A bearish valid pullback is a candle closing below the highest bullish candle's low. Okay, so let me say it again. It's a candle. When this candle closes below the highest bullish candle's low, it's a valid pullback. So when this close happened, it closed above the highest bullish candle's low, valid pullback. And opposite, a bullish pullback is when a candle closes above the lowest bearish candle's high, right? So replay that a little bit if you guys need to understand. I'll be diving more into exactly what that means on, well, what does a highest bullish candle mean, right? And so there's a couple nuances here and where people get a little tricky, but basically, for a valid pullback, we need this bullish candle to be a break of structure candle. So this candle has to close above any candles to the left. So it's the highest bullish candle, and then we need a closure below the low. So those are the two things needed for a valid pullback. For example, if we had maybe a bullish candle somewhere to the left that was like over here, let's just do this real quick. Say there was a candle here that, pushed it down, and this candle was actually higher, you know, this candle right here didn't close higher than this. So that's not a valid break of structure candle. So there'll be more there, more examples that I'll show. Moving on, what is a valid pullback not? Okay, so starting with the example scenario that I laid out here is, are we looking for a close above this candle's high because it's the lowest closing bearish candle? See? Oh, it's the lowest bearish candle. We need to close above it. Oh, yes, it's a valid pullback. No. This bearish candle did not break the low of the previous bearish candle right here. It didn't close below. I should say did not close below the low. Okay, so it did not close below the low. So this isn't the lowest bearish candle. We would be considering this one, right? This is the candle that we need to close above to be considered it a valid pullback. And since this candle did not close above it, this is not a valid pullback, right? And again, would this be the high that we need to close above right here, since it's the candle that put in the low right here, right? Because this is the candle that put in the low here. Well, wouldn't we need to close above that? Because, some people have certain wording, things that they saw in videos that might have confused them. But no, it's not the lowest bearish closing candle, right? It's not a bearish candle. So you're not looking for that, let alone, because it didn't close bearish. Anyways, so this scenario, hopefully you guys can understand how right here, the first real break of structure candle, this is not a break of structure candle, right? It didn't break the structure here before, so it's not a valid pullback. Moving on, how are valid pullbacks used? How do we actually use them? Now we know what they are. How do we use them? So a valid pullback is a component of what's required to make a valid swing. Inherently, a swing, would be a high and a low, which means valid high, valid low. We'll talk more on like valid and protected, but for this to be a valid swing, it would need to be a valid pullback and a valid break of structure higher. So price was pushing up, we had a valid pullback, this red leg, and then a valid break of structure. So what this is a continuation pattern, essentially. So we could potentially expect price to come back into our continuation zone. Maybe I should ignore the 30, 70, only use 50 for now starting off. Push into the 50%, and then we could expect the move higher. right? So that's how we use. And then similarly, if we get another break of structure here, right? If this is a valid pullback and a valid break of structure, this could be another zone for a continuation zone, potentially, right? So that's how you can validate swings with valid pullbacks. And then valid pullbacks are used to decide whether a low is a valid low and can be considered for a potential protected low, right? So that if that low is broken, we have a valid flip. So what that means is, right, so here we have a valid high, valid low, right? This high was validated when we got the valid pullback, and this low was validated when we got the valid break of structure higher, along with it being the valid pullback. It's all combined, okay? And so what if price breaks lower, comes back, and gives you, your flip reaction from the pullback? So what we need to use valid pullbacks is determine whether it's a valid low, so it can be a valid flip, right? Right there. And so kind of moving on with that, we have that same thing here to move our protected low up, okay? Let's say we got a flip, and here's our protected low. When we broke higher here, when this pushed higher and broke the high, this is our protected low. And then so after our pullback and push out, we got a valid pullback, valid protected, or what the heck, valid pullback, valid break of structure. So that means this is a valid swing and a valid low that's a protected low. So now, essentially, if that got broken, we can consider it a valid flip to keep going back down. Let's not get confused about first flip is fake and all that other, that's for another video. That's more advanced. This is just simple mechanics, right? Valid pullback, valid break of structure. So it's a valid low that we trailed it up. Similarly, if this valid pullback, valid break of structure, right? It's a valid swing. So it's a valid low that we can trail our low up. So that's trailing your lows. That's how we do the trailing your lows. And that's how, the market moves. It's just a consistent either break of structure, pull back for a continuation, or break of market structure, the protected low for a flip, right? So it's constantly moving like this, flipping down, moving down until it flips back up, right? It's just, that's how the market, So we've got valid protected low trailing. We understand that. And then this is basically just the same thing. For this to be a valid flip, we need the leg in red to be a valid pullback, valid break of structure, and then so we know that's a valid low, so when it breaks, it's a valid flip. It's the same thing, really. And then the third thing that you can kind of use valid pullbacks are that I've noticed is valid pullbacks are used to help count swings, right? And so one thing I want to quickly note with counting swings is that it's not exact, like it must be a valid pullback and then a valid break of structure and then that's our one swing. It's kind of more of a feel thing, like 527. It's more, it's more of like, well, what size of swings do you see? Even if it's a valid pullback and a valid breakout, what if they're just like a few tiny ones here and then we get a swing like this, right? We get to keep big swings. Do you count all those little ones? Are they relative swing size to the other swings? It's relativity. You kind of want to look for swings that are like the same size, right? So 1, 2, 3, 4, 5, 6 pullback, 5 to 7, potentially we can have a reversal. So we have a flip, right? We closed below this low, so we flipped. We came back into our area, and when we get a flip, we want to understand, okay, counting our swings, are we at 5 to 7 pullbacks where we could potentially expect a reversal? Well, we are. So this is good. And ideally, honestly, something like this would have happened earlier to give you like a fake flip. So you can also have your first flip is fake out of the way. Okay, wait, I'm doing that wrong. So we can have first flip is fake out of the way. Hopefully somewhere down here, first couple swings, you get a fake flip. You're like, oh, of course that's going to be a fake flip. First flip is fake, plus we're not even 5, 6, 7 swings up yet. Okay, and then ideally also you get some POI to the left, so some SNDR zone or any zone really. Higher time frame POI to the zone that goes in line with this, because you want to be careful that a flip, let's assume this is a 1 minute structure we're following, that a 1 minute lower time frame flip is not just a higher time frame pullback. So we're expecting price to short from here, right? We're expecting shorts out of this flip. But what if this whole thing is just a higher time frame pullback? So this is the structure on higher time frame, right? This is just a pullback. You want to be careful because nothing in here was part of structure on this higher time frame, but there was one here and one here. So you want to make sure that this is even a higher, a higher time frame sixth pullback as well, 5 to 6 pullbacks. Let me just redo it. So you have, maybe you had that, right? So maybe this right here is your higher time frame 6 pullbacks. And ideally you have something, to the left too anyways. So that's just something to keep in mind with pullbacks and how to use pullbacks. Make sure that you saw how I draw a bullish higher time frame trend. Well, you want it to line up, where actually I don't need to draw multiple swings. You want it to line up where your flip on a lower time frame is also in line with the pullback on the higher time frame, right? So this whole run up is just a higher time frame bearish pullback, or yeah, higher time frame bearish pullback. So it's a downtrend. We're looking for sells. We're looking for all the swings up to hit our POI. Like maybe there was some SNDR for breaking some low over here or something, whatnot. So it's combining the pullbacks and that, and then moving on. This is already 11 minutes, and there's more I want to talk about. So now we can understand how to put pullbacks in, how it's used to create structure and whatever. Now, kind of what I want to just go over really quickly is clear up some things basically. So I'm going to pull up Dave's video, right? Obviously, full credit to Dave. I'm going to play this. I want you guys to listen to what he says.
So here's the part that gets tricky for most people. What most people are doing after you get this closure above is that people are a bit confused with, you see this high here, and then this candlestick low here. You
This
see how
high.
we trade up above, then we short below it right here. Everybody and their mother's ready to go short, but from what I've realized and what I've learned is that if the pullback doesn't have a body closure below the previous candle, then I do not consider it a pullback.
Okay. Previous candle. This is what I want to talk about. People are confused about previous candle. So they're like, oh, we got a bullish candle, right? We need a pullback below the previous candle or a close below. So that would be this one. No. He means previous candle to the one that is potentially doing this close. So this black candle, you can't see it, but it wicked below this low, right? We needed this black candle to close below the previous candle's low, which is this one. And if you notice, look at where he draws the line, the low of here, not the low of the previous candle from this one, okay? So I just really wanted to
see this
look, and he draws it again even cleaner on that low, okay? So just wanted to clear that up. Previous candle to the one that is potentially doing the close, the shift, whatever you want to call it, okay? Got that out of the way. Now, a couple examples I've got in the past. So this is someone on Instagram. It's the exact same thing I'm just talking about. Look, he's marking previous candle. We got that. It's the same scenario. He's saying it's a fake pullback because it didn't close below the previous candle's low. But we just looked from Dave's video. This is wrong. So this fake pullback is wrong. It's actually a real pullback, right? It's actually a real pullback. Then people are going to tell me, well, why didn't it short here? If that's a real pullback and it's a real flip, why didn't it short? Well, remember, higher time frames obviously bullish. This flip is just a higher time frame pullback, right? 1 pullback, 2 pullbacks, 3 pullbacks, 4 pullbacks. That's what that would look like on the higher time frame. And then moving to this image that, I posted it in my server and there was a couple things wrong with it. I thought it was right because it looked good here. Oh, look, highest closing candle. It didn't close below, confirm that it's a pullback if it closes below here. Yes, it closed below here. So it's a valid pullback. That is correct. What about this? No close here, not confirming that's a pullback. Well, that's a correct depiction. It didn't close below that low. But what about right here? Look, he's saying no candle close here, not confirming this is a pullback. But look at the low he's marking out. Is that the highest bullish candle? No. So that's a wrong markout. That's not the low we're looking for a close. It would be this one. So this should have been marked right here as where the fake pullback would have been. This one, this depiction's correct. Same thing that happened here. This is like double wrong because it's the wrong low he was looking at, right? And then moving on to here, what also could be wrong with this image is what if this candle right here, bearish candle, gaps down, right? Gaps down, this is the open, and it pushes up, so that's actually a bullish candle, right? What if? Who do we know? This candle doesn't have colors. So if that's actually a bullish candle, are we looking for that high to be closed above for a valid pullback? No. It would be this one right here because that's the lowest bearish candle. Unless this one closed below. It's kind of weird with the way he did it, like a Heikin-Ashi. Whoever did this, I don't know. So that's the thing. It's got to be the right color. It's got to be the lowest closing, you know. So this is a right depiction on a fake pullback. Yes, that is the correct high would be looking lowest closing bearish. This one wrong. Look, no candle close. It should have been this high that he marked out for the potential pullback, but wrong. So that's that. I just wanted to clear this image up on what's wrong there and that previous candle thing that people don't understand and whatnot. So that's honestly basically it. 16, 17-minute video, not bad. There's more I could definitely go over in real charts that I am going to go over. So now that we have those out of the way, let's go to some real charts real quick. So for example, this run up, right? Highest closing bullish candle. Did we get a close below that low? Yes, right? So that is a valid pullback and a valid break of structure. This candle closed higher than this high right here, right? Zoom in a little bit. So what we could potentially do, right, is draw our zone. Just a 50%. Actually, you can't even see that. So we have our 50% zone. If we get a push into there, potential buy. Oh, how would have that worked out? Pretty well. You would have easily got, you know, a few points. I mean, it went, I guess it dipped lower, but if you had your bottom of zone, your SL, right, you never got hit your SL, and eventually it pushed up 11, 12 points. So that's nice. And basically, let's follow valid pullback little from apart from that trade. So highest closing bullish candle, we need to close below here for a valid pullback. Did this close below? No. Oh, this one did. Look, this one closed below our highest bullish candle's low, right? So this is a valid pullback on this close. And so if we break higher, valid pullback, valid break of structure. So this is a valid swing. And we take the lowest point, the highest point. So this is our break of structure. When we get our new break of structure on this candle, we take the lowest point in between those. Similarly with if you're like trailing your lows, protected lows, you take the lowest point in between. So anyways, highest bullish candle, it closed just a tick above that one, valid pullback, but no break of structure higher. So since this was our protected low at the time, right, now close below, it's a valid flip. So we can expect potentially a push back into 50%. Oh, look at that reaction. Pretty baller. Right? So that's how to use valid pullbacks, counting it, flips, continuations, and whatnot. Okay, so I want to do a higher time frame example in the charts really quick. So where was the example? Okay, here's the example. So let's count our pullbacks here, right? Count our swings. So I know this didn't do a valid break of structure. So would it be a valid break of structure? Valid swing down? Not essentially. It's not a part of structure, right? Only things that would break this is a part of structure. It can only be We need a close above. So it's, not a part of structure, but counting swings, like I said, it's a little kind of just what do you see and how big? Like you could almost consider that 2 swings, but it's not a break of structure. I like to see at least like a swing down, valid pull with a valid pullback, break of structure, valid pullback, valid break of structure, right? So we're at 1, 2, 3, valid break of structure, 4, valid break of structure, 5, valid break of structure, 6, and then potentially when we are closing, right, we close, where's the highest closing one? Right here. So this is a valid low. We closed, this candle closed higher than here, valid pullback, valid break of structure, so that validated this low as the current protected low. So when we broke it here, look at the tap, right? Let me get rid of this zone because I have the 30 and 70. Oh, there was a reason I had 30 and 70 there because I wanted to show that it lined up with the 50% of this SNDR, but we're not going to talk about that right now. Anyways, so valid flip, but what happens? Are we expecting this to short? What happens? It kills us. It kills us. But you're like, what do you mean? We're at 7th pullback. Like, look how high. Like, look at all. Like, we're so high up, and it should come down. We're high. Buy, sell high, right? You know, why did this fail? So what we can assume is, well, it's just a higher time frame pullback. This flip in here, technically, it's not even a pullback on the 12-minute. Look at that, right? So it's just how many swings do we have on the bigger one? 1, 2. Do we even count those? No. 3. Not a valid break of structure. It's only like 3 valid swings up. I mean, that one's not valid. Didn't break a structure. But anyways, it's only a few swings up on this current higher run, right? So we would have want to wait for a few more swings. I actually have no idea what's happening. I could play price. Potentially we'll see what happens. But let's go up a time frame. What does it look like? Oh, look, we're in a huge bull trend, right? So are we going to short? Well, we just broke higher, right? Not much, not much reason to short that. That's not the best location on the higher time frame and whatnot. So the last example I have here is kind of how to use pullbacks in conjunction with like candlestick structure, right? So there's candlestick structure and normal structure. I kind of basically just went over how to find normal structure and then also candlestick structure. It's like what would structure look like on the lower time frame, basically. So we have high, low, high, right? It's a candlestick flip, but it didn't break lower, right? Candle close saved you if you were holding this sell for a lower target, right? Because we didn't close below that low, so it's not a valid pullback. So sometimes it's good to wait for that valid pullback to occur and then treat that like your candlestick structure flip. So when it pulls back to the 50, potential shorts if you see what you want to see on the 5-second or whatever your confirmations are to enter a trade, right? So a lot of the time, with candlestick structure, these are going to be the flips that work though, right? Because on a 5-second, that likely closed below here, and this is a structural 5-second shift. It is. I could probably show, right? It's a valid break of structure, valid pullback, valid break of structure. So that's a valid protected low on 5-second. Look, we flipped. I mean, your first technically, if you went to 50 and you sold, you definitely could have got 5 points out of that. But like I said, if you were holding for a lower target, expecting this flip to be a real flip, not just a little reaction pullback, right? So this brings to the point of like relative strength where close equals stronger, where equals you can expect a further reaction from price. So were you wrong here to sell here and take your 5 points? I wouldn't say so, right? I wouldn't say that's wrong. It's all about what you can expect on strength. Closes equals stronger, which equals you can expect a further reaction. That's all it is really. But that's why beginners should start off with only closes because it's strongest. It's going to keep you on the safe side the most. Sure, you'll miss some trades, but you'll stay on the right side. Okay. Hope you guys like this video. right? There's more I could talk into, like with candlestick structure on like, oh, well, even this is the low of the highest closing bullish candle. Is that really a great low to look for a flip? You know, maybe not. But in this case, obviously that would have been great. Anyways, I hope you guys like this video. Don't want to make it longer than this. Peace out. If you like this video, guys, give it a thumbs up. I would appreciate it. If you don't like it, thumbs down, you know? And I've got a little Discord group, over 200 people in there now. Check it out. Maybe link is in the description. It's completely free. I don't do anything paid. I don't sell anything. We're just trying to get better, make money in trading. Have a good one, guys.